We've seen oil prices open down in Asia this morning, and generally on the negative news coming out of India, which is obviously an escalating crisis. Let's kick off with our regular commentator from India, Mr. Narendra Taneja, India's leading energy expert and a senior energy advisor to the BJP ruling party. Narendra, I really don't know where to start, so I'll just start with, what's the outlook for what appears to be a raging fire?
Well, right now, as we speak, I'm sitting in New Delhi, and when I look around, Delhi is under curfew. We're not allowed to go out. Economic activities are down by almost 80% because offices are shut down, and that's the situation in many other parts of the country. Roughly 52 to 53% of India is under, some form of lockdown or curfew, which means that economic activities are curtailed, offices are shut, and people not allowed to move out. So that's and in some places, especially some very important areas economically, such as Mumbai and Bangalore and Gujarat. The situation is more or less the same as in Delhi. In fact, in Mumbai is worse, which is the economic capital, financial capital of India. So overall situation is rather grim, unfortunately, and for instance, in Delhi, we have 25,000 new cases in a city of 20 million people. Hospitals are overflowing with patients. We have shortage of oxygen. So oil and gas companies are told to shut down their operations briefly so that the oxygen they use can be moved to hospitals. So oxygen trains are running now from industrial towns to big cities like Delhi and Mumbai. So it's a rather grim situation. It's a kind of, we can call it medical emergency, and the government has announced some tough measures, and we hope that in the next couple of weeks, maybe by end of this month, we will beginning to see some light at the end of the tunnel, and country and the economy will slowly start getting out of it. But this is still what we hope and pray. And at the same time, the government has announced massive campaign for vaccination, starting from those 18-year-olds plus, etc. So I think there's a lot going on, but at the same time, we talk of today, since you are a daily show, the situation is grim, not good for economy, not good for the public health, and not good in any way. So we're just keeping our fingers crossed and keeping hope alive, and we expect with the new measures initiated by various state governments and the central government, we will see probably some light at the end of the tunnel by end of this month.
And Narendra, just to follow up on that, is there any particular trigger, any particular moment, policy that came into place that allowed this sort of wave to grow so dramatically?
Well, my sense is that, I would say my personal opinion is that, two reasons mainly. I think India was doing very well if you look at COVID statistics of January and February and March. And we thought, many of us, not me, but many of us in the country thought COVID was more or less gone. It was history. And so people grew complacent. That's fine as long as the people grow. But I think authorities in many cities and states, they also grew complacent. And the vaccination campaign was going, but there were many people not going for vaccination. And at the same time, cities after cities, we witnessed people had actually thrown away even their masks and social distancing. And there have been political rallies, there have been religious congregations where thousands and thousands and thousands assembled without masks, without maintaining social distancing. So I think, this was basically complacency on the part of the people, complacency also on the part of authorities in some parts of the country. And at the same time, I think, overall, this thing that India was getting out of it, and India was doing it very well because of the measures we had taken, because of the social distancing and the discipline we have displayed, that we are among the first large economy which have come out of it. But that was evidently not right. That was not what was happening. It's a chess game going on now between COVID and the state and the government, in the sense that sometime government wins. Last 3 months, government was winning, but now it looks like that COVID had decided to hit back. So this
Well, there's
check game is going
certainly,
on.
one would think, lessons to be learned as other countries emerge out of their lockdowns, the UK, US. Matt Stanley, director at Starfuels, despite the rather grim outlook for India, one of the world's biggest countries, the biggest oil importers, prices are still holding quite firmly at above $65 a barrel on Brent. The markets don't seem to see this as a crisis of demand recovery, a crisis for demand recovery.
Yeah, morning, Sean. Morning, panel. Again, I've just got to touch on what's happening in India. It's such a tragic set of circumstances, and thoughts are with everyone. Let's hope they get out of it soon. But yeah, look, you're right. It's being ignored. Macro data that's coming in is being ignored in general. I was talking to a couple of guys this morning. You look at Brent structure. I mean, it's $3.10 backwardated until the end of December. And that's a highlight of who is piling into this market, Sean, is that it's not the fundamental traders. It's money flow. Stimulus is still there. It's cheap money, and it's relentless. We look at the fundamentals. Ed and I had a chat yesterday, just a brief chat. And, we're trying to see which one of us could be more bearish on the demand outlook. So we've got our claws out, Sean. Don't worry. But in general, the market is ignoring it, and you just wonder when it's going to wake up and say, okay, it's got to a point, it's untenable, and we see a correction down to, back down to 60. OPEC again are in the headlines, what they're going to do. Because look, the rally that we saw, and this time last year, I remember being on the show, fell off my chair because we saw minus $40 a barrel on WTI yesterday. That was only a year ago, and we've rallied $103 since then. It's extraordinary. And how much higher do prices need to get? We're at 2019 levels before we knew what this horrible word coronavirus was all about. Does it need to get more higher than that? The market has rallied on supply curtailments. And this year, it's leveraged off demand coming back. Look at jet fuel. American Airlines are cutting flights down to South America. Obviously, domestic travel in India is going to come to a halt if it hasn't already, as Narendra was saying. Japan are in the midst of a crisis. What happens with the Olympics? There's so much negative energy around the energy markets themselves, but funds don't care. If you're putting some money into an asset right now, energy is a good way to get a return.
Well, Ed Bell, Senior Director, Market Economics at Emirates NBD, one of the possible triggers of defying this kind of logic, perhaps, is the fear of inflation and assets as a safe haven. We had the Fed again yesterday, Mr. Powell indicating that they would continue to hold their fire and allow inflation to climb, but he did signal they wouldn't let it run too far. Your thoughts on the management? The management of this market over the last year, as was pointed out by Matt, up $100 on WTI, but through pure management of supply.
Yeah, I think from the Fed's point of view, they are going to be tracking the inflation dynamics over the next couple of months very closely. They've been very explicit saying that they think any bump that we get really in Q2 compared with Q2 2020 is going to be transitory. We had a higher inflation print for March, but when you dig down into some of the details, nothing there was really, to me, quite alarming. So goods inflation, for instance, what people are actually buying and spending and taking into their homes was up very modestly. Services inflation was higher, but you would expect that services, you don't have as many direct input costs to say publish another report or to launch a new piece of technology or software, so those can be replicated a lot easier. So the supply reaction and the services side can be a lot faster. I think what we're going to be tracking very closely is what we're in the process of, I think, really since the start of April, is that the market is kind of blinking with respect to the Fed. I think for most of the year so far, we were really banking on this reflation trade. Commodities were being brought up in that as well. So we had a rally, not just in oil prices and energy prices, but across the industrials metal complex quite closely. But I think now there is a realization from financial markets, particularly, that the Fed it means what it says when policy rates are not changing anytime soon, that they are not going to be tightening policy in any kind of near-term framework. The news overnight we had was, I think, kind of the Fed trying to downplay or push back on some political pressure that inflation is going to suddenly pop and surge and become really untenable in the economy, thanks to the accommodative monetary policy and the loose fiscal policy we've seen enacted. And Jerome Powell outlining that the Fed has a lot of tools to be able to push back against inflation. Remember, we're at zero in terms of policy rates. So there's a lot more room. You can go higher, even if you brought policy rates up to 0.5%. That's not really what I would classify as tight monetary policy, but that would probably go some ways to helping to dent any burst in inflation we get in the near term.
Well, any reversal or pause on this historic easing would be quite damaging, or in terms of the market, financial markets in general. How much do you think that is a handcuff to the monetary policymakers, Ed, that any gesture, given the fragility of the market, that any gesture will from the Fed could be quite devastating?
I think many of sort of colleagues who are trading fixed income or FX markets probably wouldn't want to hear these views, but I don't think the Fed really cares about a bond manager's P&L at the end of the day. I think the statements that we've been hearing from this Fed in particular have been quite direct in terms of there are specific unemployment goals, wage goals that the Fed is targeting. So not only do they want to bring headline unemployment down back to what they classified as sort of full employment levels, so that's probably sub 4% like we were before the coronavirus pandemic, but specific segments of the US labor force that they want to see that unemployment rate come down much more. So marginalized communities, people in lower income segments of the economy, they want to make sure that they are benefiting from the recovery, which looks like it's going to be quite strong in the United States before the Fed pulls back on any accommodative policy. So I don't think that necessarily they're paying attention to, for instance, daily moves in equity markets or treasury markets to be setting their policy.
Narendra, just coming back to the story in India, and you mentioned there the impact on the wider economy, and even to the extent where oil production has to be curtailed for the supply of oxygen. Where is the other sort of the granular impact on this current crisis playing out through the economy? Would we see oil consumption, energy consumption continue to decline through the rest of April?
Well, honestly, I mean, I think we'll have to wait for maybe a couple of more weeks. If the situation gets under control by end of this month, as we all expect, I think then probably we'll bounce back very, very fast. If you look at the past and also especially the last 4 or 5 months, we have gone through it earlier also before, and then that we actually get out of it very fast. So my own sense is, for instance, that I think if we are able to control the situation within the next 2 weeks, then we don't need to worry too much. And I think within next 3 months, then situation would be again back to more or less normal. And the flights and the trains and the road transport, everything is going to back to more or less normal, which means the petrol, diesel, turbine fuel consumption will actually get back to normal, as we saw in the last few weeks. But it all depends on, because this time it seems that COVID attack is more comprehensive and deeper. So I think there are lots of challenges especially for our health establishment. So that's why I'm keeping my fingers crossed. So I think I'll need another 2 weeks before to give a more kind of clear answer to your question. My own sense is that one good thing about India and the Indians is that we are very good at bouncing back. So we are very good at, for instance, forgetting about what happened and look on the brighter side. So that's a tremendous strength that we have as culturally in this country. But that said, at the same time, as I said, I would rather like to wait and see how things unfold over the coming next 2 weeks.
From the point of view of the sort of GDP forecast for India, they're quite robust. Prior to this wave, World Bank had it at above 10% for the next fiscal year. Do you think those sorts of data points will need to be revisited?
Not significantly, because my own sense is that we were in any way hoping that by August and September, things will be more or less back to normal. It's still our scientists, our experts, they are saying the same. They say this setback is there, but this is temporary because the government has decided. Only yesterday, the Prime Minister announced that we are not going to go for complete lockdown. So these are only kind of, limited lockdowns for a very limited period of time. And the strategy is very simple, that tries level best so that the overall general economy is not harmed. And GDP, kind of projections are maintained at the same level. There might still be, a bit of setback in terms of what we want to expect in terms of GDP. But my overall sense is that, the fundamentals are very strong, structures are very strong, overall confidence to the people. Despite what we are witnessing in Delhi or Bombay, people are sitting in their offices. Many of them are working. Many of them are stock exchanges working. Overall sentiments are reasonably fine. So I think, so my own, as I said, my sense is this is temporary setback. India will get out of it fast, but when exactly the damage is going to be there, what is going to be the kind of depth of damage, for that, I think I would rather like to wait for 2 weeks. But I would like to conclude with one thing, that this I sense that I had earlier, that by September, October, probably things are going to get back to absolutely normal. I think I'm going to revisit that belief, and maybe probably not before December. But as I said, I would still like to wait for another 2 weeks before I really shift, certainly, but to whether to December or to November, I would like to wait for another 2 weeks.
Matt, that's just a reasonable point. This second half of the year recovery that has been baked in the cake for some time, the IEA, OPEC have a 5.5 million barrel a day oil recovery this year. We also have the announcement this week by the US State Department that they are going to be giving travel warnings to 80% of the world's countries, from 16% on Monday this week. By the end of the week, it's going to be on 80% of the world's countries, 160 countries under travel warning. What are the consequences of that, do you think, for that demand recovery in the second half of the year?
Look, I think that has already been kicked down the road, if I'm honest with you. Of 5 million barrels of demand, excuse me, that's going to come back, that people have forecast to come back, half of it is jet fuel. Listening to the radio this morning, the UK the Consul General for Dubai was on. And of course, the question that every Brit and everyone, you as well, Sean Island, you've got these new quarantine restrictions, go back and see your family. It's not going to happen. They're not even going to make a decision until June. And then we've got to be realistic. If the quarantine is lifted in the UK, that's an important travel corridor. It's an important trade route as well. You're not going to have to quarantine in a hotel for 10 days. You're not going to have to stay at your mum's for 5 days before you can go to the pub. Whatever it might be, it's not good for jet fuel demand making the return that people forecast. So the can has been kicked down the road. The thing is that refining margins are still stronger than they have been. I'm looking at the gas oil refining margin. People are assuming that a lot more jet fuel is going to be taken out of the diesel pool and jet fuel will make this comeback. I honestly don't see it. I honestly can't see. We had Russ Edwards on Monday. He saw Q1 22. I agree with that. I think, sadly, the reality of reality is that we're not going to see things return to any semblance of order or any normality until Q1 22. And I just want to touch on Narendra's point, and I admire the the positivity and the bullishness that obviously the Indian population have, but we look at the figures, and I don't want to put a downer on it or be negative. Cases in India were 66 days between 11 and 12 million cases. 13 to 14, it took 15 days. So there will need to be some serious curbs on people traveling. And I don't see that lasting for 2 to 3 months. You look at what most countries, how they've succeeded in containing the virus, New Zealand, Singapore, these places, that the UAE as well with the vaccination drive. But obviously the question is going to be, is the Indian travel corridor going to shut soon as well? That is probably the UAE's most important trade route. The guys at Emirates NBD wrote an excellent piece on it yesterday. Suggest you read that. It's very, very good. And you can't control something if the mindset is in 3 months, everything's going to be okay. I disagree with that logic. The oil bulls don't seem to care, but the fundamental physical traders that I'm talking to, they see the Q1 22 really being when things are going to come back properly.
Ed, the other story overnight and over the last few days, but overnight some progress, is the Iran rapprochement talks with the Permanent Five on the nuclear agreement. Comments by Rouhani indicating that they're getting quite close and this could happen quite soon. Your thoughts on that and its ramifications for markets in general and particularly the oil markets?
Yeah, I think we're kind of doing a two-step in the negotiations or the talks, where we seem to have some positivity in negotiations that have been occurring in Vienna, then seemingly a ratcheting up of tensions related to a cyber attack on Iran's nuclear facility. And then, yeah, as you say, the positive news overnight. I think all in all, you know, a lessening, and also we've had direct talks between Iranian and Saudi officials also occurring this week. So any kind of lowering of the geopolitical temperature across the Middle East or between Iran and the United States would certainly be welcome. In terms of implications for the oil market, you know, I don't think that it's a necessary an immediate change that we're going to be happening, that suddenly Iranian barrels are going to be flooding into the market by the end of the second quarter. But nevertheless, it is the potential that you could have, you know, 1.5 million barrels a day of Iranian crude coming back in if all the kind of diplomatic ducks get in a row and we have both Iran and the United States return to the JCPOA. Now, let's not forget, though, that we are going to be going into an Iranian election cycle as well. And you can imagine that a kind of a hardliner conservative candidate might want to use this as their main talking point against the Rouhani administration, in terms of saying we will be more difficult or more hardline in terms of the United States. We want to see exactly what are the sanctions going to be removed. And recall that the sanctions are not only going to be lifted just with respect to the nuclear program in Iran. There's going to be other activity that the United States believes Iran is behind or is carrying out, that we may not see as much amenable negotiating posture from the Iranians on that side if they want to have those sanctions actually lifted. So we are watching it with, of course, some interest in terms of the positive impact that, you know, you might have the peace dividend bring about. But not really calculating it into anything in the near term right now.
Let's get the survey question, give the room a chance to comment this morning and on this issue of the outlook, the sort of tone of the outlook changing. US to drastically increase the number of countries that get the level 4 do not travel warning from 16% of countries to 80% of countries. The question is, should OPEC Plus revise plans to raise oil supply from May to July? They are due to meet next week. Should all of this trigger a revision of that decision? Narendra, obviously OPEC are scheduled to meet next week, although there are some reports that they will maybe push that meeting. Your thoughts on I know earlier in the year that you were somewhat critical of the decisions that they were making and propping up prices. Your thoughts on the current strategy going into the second quarter?
Well, as he said that, you know, I mean, India and many other countries, they may not have a very big voice, but many other countries, we're the third largest importer of crude oil in the world, as you know. And so we have been directly in touch with various main key players, including Saudi Arabia and also Russia, you know, I'm referring, of course, to OPEC Plus, on the same issue that, you know, they got to help the global economy to recover fast, which means that, you know, all that they're trying to do, push the prices up, they should be careful, because in the short to medium term, forget about the long term, they actually would be among those suffering from that. So that said, at the same time, now India is preparing to raise this issue in G7 meeting in London, and also later on at, you know, G20 meeting. And at the same time, you know, there are other forums where India has already raised this issue, and at the same time diversifying supply from non-OPEC countries as part of the strategies to send a message to OPEC that if you really, you know, stick to your policy, then we will have to look at other options too, including, of course, investing more in renewables. So all that is going on simultaneously, because when we do that, we are not looking only at the next 12 months or the next 1 quarter. We are looking at next 10 years, because India is going to be among the last country to stop using oil in the world. So we are preparing accordingly. And at the same time, right now, if our requirement is 5 million barrels a day, we know is going up all the time. It is going to touch 9 million barrels actually sooner than people think. So we are preparing for that at the same time, and at the same time building good bridges with all the OPEC countries, more particularly the West, Middle Eastern countries, including Iran. I mean, we will be happy, of course, if the US and Iran, they see some thaw and there is some progress, because Iran has traditionally been an important supplier of crude oil to India. In fact, a couple of our refineries are designed only for Iranian oil. So we'll be very happy with that. But at the same time, the US is a very important friend, and so is Israel. So we got to kind of look at our priorities and see what works best for our national interest.
Can you be friendly with everybody? This is the challenge of the period.
But US is a strategic partner, and Israel is also a strategic partner. So these are very important countries in terms of how we look at the global security situation.
Well, maybe India can play a role in that space where it looks like the US, in some ways, their relationship with Israel seems a little uncertain at the moment vis-a-vis Iran. Is there a role for India to play in finding some kind of balance there?
Well, good question. Good you raised this issue. In fact, India had in the past, if you look at it, carried envelopes from Tehran to Washington, D.C., and also between Tehran and Tel Aviv and Jerusalem. They've done it. And in fact, we enjoy very close relations with the Biden administration, and so that's the case with Israel also. And at the same time, we have enjoyed civilizational relationship. We are like brothers when it comes to Iran. As you probably know, those who follow history, that Iran is not an Arabic country; it's an Aryan country, and so is India. So we are Aryan brothers. But at the same time, when it comes to our current strategic interest, the US is very important for us, and so is Israel.
Yes, and perhaps even more so with a more kind of resurgent China. Let's get the survey result this morning before giving Matt last word. Should OPEC Plus revise plans to raise oil supply May, July? No. 48 yes. I mean, it's pretty 50-50 view in the room here. If this continues, Matt, I mean, ultimately we had Jorge Montague on last week saying that we could need another 2 million barrels in the third quarter. How does OPEC read these developments vis-a-vis India and other places, do you think? How should they?
Well, I think that's the second day on the trot. You've had a 50-50 answer on your survey question.
Yeah.
You need to get a bit more dramatic on your questions.
Yeah, exactly.
No, I think
people need to get more aligned in their opinions, perhaps.
Yeah,
that reflects, I think, always a case of nobody has a clue, right? So it's like close your eyes and press the number.
Yeah, that's exactly right, and it's this ambiguity as well that OPEC will need to, coming on to your question, this ambiguity that OPEC will need to address. The situation is so fluid, and this has been a fascinating 30 minutes to review what Q1 looked like, because Emirates NBD numbers were very good, India demand was coming back, and we're a sixth of the way into Q2, and everyone's locked down again, and demand looks like it's faltering. Q2 could wipe out Q1 gains, and OPEC have taken the decision where they are going to not meet twice a year; they're going to meet once a month, and that reflects on their ability now to react with market conditions. But like I said, and I'll finish the conversation how I started it, the market rally last year was dependent on supply curtailment. Supply is coming back in May. If the meeting is cancelled or it's just a JMC, as Amin has said yesterday, that's okay. And it's Ramadan, so perhaps that should be expected. Ed said that Iran's going to come back. They're producing, say, 1 million. Most of it's going to China, some India, apparently. And they're going to bring back 1 million if by the end of Q2 they come to an agreement. Okay, so 2 million barrels a day back in terms of supply. And then India is the third biggest country, say 20% drops off in demand. So, of course, they will look at this situation. But then you look
the other side of the India story is also the reduction in domestic production. So there's kind of a balancing out there.
Yeah, I mean, the oxygenates are used in gasoline production, etc. So obviously, as Narendra said, that oxygen is going to go to the healthcare system, as it should. Why should a priority for someone filling up their Bentley instead of someone making sure they've got oxygen in the hospital bed, But then you turn it all back to where oil is trading. And we're minus 25 cents now on the day. We were minus 80 3 hours ago. Nothing fundamentally has changed. but it's the people who are investing in the oil market that is skewing realism and reality. And that's the issue the market faces. We've got EIA data later. If there is going to be crude builds, refinery runs are still down, the market may look at correcting itself over the next couple of weeks because April's not been great so far.
Well, let's wrap it up there and thank our speakers for their contributions today. Narendra and Narendra Taneja in India, thank you so much, Narendra. Best of luck. Obviously, hopefully everything does start to move in a different direction. Matt Stanley in Dubai, as always, thank you. And Ed Bell, Emirates NBD in Dubai. Thank you, Ed, for your time and insights this morning. We have a good interview on Halftime Talk this week with Malia Bengali, giving her comments and insights on where she thinks the Fed is going and the risks they are taking and the consequences of the risks they are taking. Pretty sharp analyst, I have to say, Malia. So I'd suggest you take 20 minutes and listen to her comments. All the best, and thank you, everybody. Have a great day. Cheers.
Cheers.